Greetings, members one and all of the Salivation Nation. The markets are still moving upwards, especially gold here. It's hit a 14th month high, or very near there. This article from the Wall Street Journal, let's explore and take a look here. Has gold, has it regained its shine? Let's see here. Gold prices climbed Friday as mounting concerns about the health of China's economy hit riskier commodities, and tensions in the Middle East push investors into haven assets. Gold futures for August delivery, the most actively traded U.S. contract, increased 0.1% to $1,344.50 a troy ounce, parrying gains after trading at the highest levels since April 2018. The rise accelerated after the National Bureau of Statistics released figures showing that Chinese industrial production grew at its slowest pace in 17 years in May, adding to fears that Beijing's efforts to stimulate growth are faltering in the face of trade frictions with the U.S. Industrial metals are down and gold is rallying. It's the part of the same picture. The Karsten Menke, a strategist at Swiss private bank Julius Baer. The efforts by the Chinese government, by various measures, from fiscal policy to monetary policy, haven't yet been hugely effective. Friday's move continued a strong run for gold. The precious metal notched its 12th daily rise in 13 trading days as investors bet the slowdown in the world economy was hurting growth in the U.S., and would lead to the Federal Reserve to lower interest rates. So here we can see this chart is kind of really telling here from the Wall Street Journal. Precious metals have rallied while industrial metals have dropped on China fears. And this chart, even though the one metal that's not on here, this tells us why silver is lagging behind and why that ratio between gold to silver continues to be very, very wide. We got palladium, a speculative metal, has moved way up here and is broadening its gap between gold and silver. We'll take a look at those prices later, but gold is holding its own. A percentage over the past month of 5% there, and gold has made that move since over the past year. And but yeah, look at that, crazy. And then copper is going down. Gold, which has rallied 5% this year, becomes more attractive to investors when yields on interest-paying assets like government bonds fail. However, a stronger dollar counteracted with some of the appeal as gold is priced in dollars and becomes more expensive to other currency holders when the greenback rises. The WSJ dollar index was up 0.4% Friday. So in other words, as the dollar stays strong and gold goes up, the other currencies become weaker and the gold becomes much higher. In fact, it's breaking records in other currencies. The latest leg in the rally came as stock market slipped in Europe and Asia, and government bond yields fell across the board. The yield on a 10-year U.S. Treasury slipped to 2.093% on Friday from 2.096% on Thursday. Yields fall as bond prices rise. Copper and other industrial metals, which are highly sensitive to Chinese demand, declined while oil prices rose in response to the attack on two tankers in the Gulf of Oman on Thursday. The Swiss franc and Japanese yen, also seen as havens, both rose. Money managers have ramped up bets on gold since late April, when they were mostly wagering that its price would fall. Speculative investors held 156,718 more long contracts and short contracts as of June 11th, according to the latest data from the Commodities Future Trading Commission. Some market participants said this bullish positioning leaves gold vulnerable, especially if President Trump and his Chinese counterpart Xi Jinping make progress on trade at the G20 summit in late June, and if the Fed doesn't cut interest rates in July. It's all about the dollar. It's all about the Fed. It's all about rates, says David Govett, manager of foreign exchange and precious metals at London-based broker Meritz Spectrum. On balance, he thinks the Fed is more likely to keep interest rates on hold than cut them this time in July, but they're thinking that they may cut them later. So there's another one. But although I will say it's not always all about the dollar, it's not always about the Fed or about its rates, because other things can come in and cause economic instability, and black swans and geopolitics can have a play too. And that's kind of what we're seeing in some aspects. Other analysts think gold could have further to go on as long as tensions between the U.S. and China are running high. It's been holding really well, and as long as trade tensions are in the background, it will continue to be well supported, said Joni Deves, a precious metal strategist at UBS Group. And then there's the thing with Iran there. And those tensions with oil, I think, could possibly have an effect on gold. We'll see how it plays out with gold and those tensions and how that ties into oil. Back to this chart here, copper is essentially going down, and copper, though I do believe, by the way, copper is money, even though it's a very cheap metal right now, and as far as stacking is concerned, unless you just enjoy the designs that are on a particular piece, I wouldn't stack copper. It's just you're paying way too much of a premium considering its price per pound. But silver is, I think, in a way, seen more, and the perception of it as being a commodity as its uses are picking up in the industrial world, and also shifting in some ways, but also it's being less sought after by, quote, investors out there. And so I think that's why you're seeing that higher widening gap between gold and silver. But gold's movement upward has been quite interesting to see, and I think palladium especially. So let's take a look at the prices here. We've got platinum now. It's eased back a bit from earlier today, but still gold is holding its own and up a bit. Silver is there, and it's under $15 again. And the platinum is getting closer to that $800 range. It's down $8, but palladium is moving up. $1,471 per ounce palladium is. And so it's the only metal that is ended in record territory or upwards territory of the metals out there. So very interesting to see. I think it's fascinating to see. Will gold hang on to its highs here? You see this chart. Here it shows it's 1359. I don't know if that's exactly right, if it got up to that high or not, but we can see that a year ago that it did hit 1362 back in January at least. So from January up through here, it's held its own. It really did go down here. Its lowest of the low was at 1184 back in August of last year. Would have been a great time to buy, but a lot of people back then were saying it's going to continue to go down. I remember back during this time, when it goes down this high, people are saying, okay, watch out, $1,000 is next. And now when it's up here really high, or relatively high here, watch out, $1,400 is next. It's understandable, those reactions, because you see momentum in the price movement, especially here. Quite a bit of movement upwards. But there's things that can cause it to go right back down again. And that's notwithstanding, it's where... It's the nature of what the metals do in cases like, when there's economic instability or a sigh of relief when things are working okay or the economy is doing great. When the economy is doing great, people want to find ways to make money. When the economy is not doing so great, they want to cut their losses and find ways to protect themselves. Hence, gold and silver, especially gold these days. There you have it. Very interesting indeed. So now, what will happen next week? What will happen in July with the Fed if they leave rates alone? I believe we may see gold possibly go down a bit, and who knows? We may see it go down under $1,300 again, perhaps in the mid 1250s. But I doubt it's going to go much lower than that. I'd be very surprised if it went down below 1250. Considering all of what's going on. And that's if everything is relatively stable on the geopolitical front, which we know there's going to be some issues that will arise. Seems like there's more of that going on these days, and tensions and the like. And then there's trade. You got to think about trade, what's going to happen with trade. And what about that bond yield inversion? I think we need to watch that. Losing Louis posted a video about that. And in a particular chart, he showed, kind of where that that red line was, essentially a red area where it dipped down below. And really, we didn't see a recession until after it had recovered. The bond yield had recovered. So, right now it's kind of dipping down. We'll continue to dip down. And once we start to see it come up, some people say that may be the sign. In some ways, I think it's somewhat different this time. I think some of the policies are a little bit different, unless they do something like quantitative easing or what have you. But some people feel like no matter what happens, no matter what they do, it's going to be unavoidable and it's going to be worse than the prior recession. And it very well may be. It just depends on how dollars are repatriated back, because a lot of dollars really haven't been since they were digitized or printed with 3 rounds of quantitative easing. And some are saying there should be a 4th round, which would be a big mistake. That could lead to the death of the dollar, I feel, and the death of the faith in the dollar. And once you lose faith in a currency, all bets are off, and then you're in a different world. You're in a different world where you have to rely on either another currency or, with this hyperinflation, if that thing were to happen, then precious metals comes into play. I don't know what would happen. What would happen to cryptocurrencies, Bitcoin, Ethereum, Litecoin, and others, if the dollar fell or failed or was hyperinflated over time? Obviously, I would think they would go up and explode, but cryptocurrencies are really, I don't think, have matured enough to the point where they become a form of exchange that we would be commonly familiar, or at least the average person. The average person really doesn't. They may understand somewhat about cryptocurrencies. I don't use them, and for making purchases or what have you. But we'll see how that plays out. We'll see what this new standard will be, a reset of the dollar. People have been talking about that for quite some time and how that will play out. And I think part of that reset of the dollar will be some sort of blockchain or some sort of utilization of a cryptocurrency tied to the dollar. See how it plays out. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and by the way, click that little bell button. I think they're trying to fix that now. So if you want to be notified of future videos, love to hear your thoughts below.